China wants to replace the United States as the dominant global power.
Shit.
But they're not doing it through war, not yet anyway. They're using money, which is the latest front in the economic battle between the United States and China, AI being one of the other big fronts. The playbook goes like this: dump US debt, forge new trade deals in yuan, stockpile shit tons of gold, launch a CBDC, reduce global reliance on the dollar, one strategic move at a time. Bam, 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 for the knockout punch. So let's start with what's happening right now. And the first signal, China's selling off US Treasuries. There's not a major surprise considering the political tension going on between the two. Those are the bonds that fund America's massive debt load. China's US debt holdings are dropping fast, and when large amounts of treasuries are dumped, it lowers bond prices, which equals higher yields. That means higher borrowing costs for the US government and by extension, for everyone else too. Now, bond yields have been coming down recently, to be clear, but this trend results in pressure on the US economy, and it's China pulling the strings here as it deliberately steps back from the US-led dollar system. Now, stablecoins are another interesting part of this entire conversation, which we're not going to get into in depth today, but that is probably the biggest lifeline that's been thrown to the US dollar in a long time. Plus, you need to keep in mind that this is all happening when the US needs to refinance for $9 trillion of debt in 2025 alone, with its debt soaring to ever higher levels, approaching $38 trillion now. And it appears that China's maneuvers here are about creating an entirely new system with gold as an integral asset. In fact, you can see that China's gold acquisition is currently going vertical. They are absolutely stacking up the shiny pieces of metal. What's more, official numbers from the People's Bank of China probably aren't even accurate, if we're being honest about the whole situation, with some analysts guessing at much higher true figures. Would you be surprised? Of course you wouldn't be. Gold's advantage is, of course, that it cannot be printed, cannot be frozen, and cannot be defaulted on. It's a hard physical asset. And also, it seems China isn't just sitting on its gold, they're actively building new infrastructure around it. China already has the world's #1 physical gold exchange. That is the Shanghai Gold Exchange. And it has opened a vault in Hong Kong. And there is speculation about further vaults opening up across the BRICS countries: Brazil, India, Russia, the UAE, and others, to build a global gold corridor with all roads leading back to China, creating a system in which countries can settle trade in yuan and then redeem it for actual physical gold, which gives the yuan a verifiable backstop. It's then plausible that some countries might question whether it's a good idea to keep their reserves in US Treasuries with the United States $38 trillion in debt, a debt that's increasing by multiple trillions of dollars every single year, and which is being politically weaponized. For example, they're literally talking about stealing over a few $100 billion from Russia, when you can have your opinions on Russia one way or the other. But that is a shot that China has heard. If there's the option to hold gold in a neutral vault and access liquidity through the yuan, a lot of countries are going to be attracted to that. And this ties directly into another major move from China: de-dollarizing international trade. Now, of course, before we get into the next part of this, guys, Bitcoin obviously is a very important global asset right now, and it's only going to get more important as these currency wars and the AI wars and everything else go on. Hopefully no hot wars, obviously. But if you want to get more Bitcoin, you want a good place to buy it, you want a good place to trade it, that place is BitUnix. There's a link right down below here. There's never been a better time to sign up for BitUnix. No KYC, no VPN, no BS exchange. You use the link, you sign up, you trade. Right now you can get up to $700 in deposit bonuses, which is absolutely crazy. Crazy trading bonuses, and we're gonna pay $1,000 every live stream. So if you want to be in to win, link down below, go check it out. So the de-dollarization of international trade, again, this is already in process. China has spent years cutting international deals that initiate a shift towards the yuan and local currencies and away from the US dollar. Russia, Brazil, Argentina, parts of Africa coming on board, even Saudi Arabia warming up to a closer relationship here. And again, the logic is simple. If you're at risk of being sanctioned, excluded from the US-led SWIFT system, having your dollar reserves frozen like just happened to Russia, China's one misstep away from being on the wrong side of the US financial weapons here, right? Keeping all that in mind, the US has created a precedent for all this. You need to have alternatives. China's seeking those alternatives through gold. Plus, they're also looking to roll out a Chinese CBDC program. I'm very anti-CBDCs. Central bank digital currency is disgusting and gross and Orwellian. It's programmable state-controlled currency, which is super authoritarian, meaning It's exactly the kind of thing that China seems to really like, okay? So they don't really have any hesitancy in doing this. The ECNY, or the E-Yuan, is already operating in an open launch phase. Ultimately, the digital yuan might later be utilized to settle cross-border trade with no need for the SWIFT system at all. These outdated banking systems like SWIFT are being replaced, and the US on the other side is rushing forward to the US dollar-denominated stablecoins across open networks like Ethereum and Solana to be the biggest buyers of US debt and make the US dollar be ubiquitous everywhere. Meaning, it's all a step up from the current systems, one way or the other, with less friction and lower costs. While it also applies pressure on global demand for dollars with the launch of a global e-yuan. And if fewer countries need to hold dollars for trade and fewer central banks want to hold treasuries as reserves, then the US might start to lose its biggest advantage, which is running the global reserve currency. Plus, remember that the US gets to borrow at low rates and run massive deficits because there's always more demand for dollars, or at least there always has been. But people are starting to question how that demand is going to look in the future. So by undermining that demand and raising borrowing costs, China forces America to play defense while pressure mounts on the US economy. Now, as mentioned, China is already buying gold like crazy and unloading treasuries. And in fact, around the world, China is not alone. Central bank gold reserves have now exceeded US Treasury holdings. There's a major switch going underway right now. Central banks around the world are slowly moving away from US debt and slowly moving into hard money, gold. And so we have the possibility, or at least an attempt, of a China-led financial reset. Now, to be clear here, the US dollar isn't about to lose its reserve currency status overnight, but the foundations are slowly being chipped away at. And again, this is part of Trump's stablecoin play to make sure that the US dollar does remain the global currency for decades and decades to come. That said, though, it looks like China doesn't want the yuan to become necessarily the next global reserve currency. That role requires openness and a willingness to run trade deficits, things that China just isn't really interested in. But what they do want is more leverage and the ability to conduct trade, issue credit, and influence developing world nations without relying on dollars and being able to circumvent the US banking infrastructure, which has been many times used as a weapon against those who don't agree with US politics. So then, where does this leave us as traders and investors? Now, let me just mention here, of course, by the way, guys, if you're not signed up to my awesome newsletter yet, we're covering all kinds of stuff all the time, from Bitcoin, the global macro scene, and more. Link down below. It's free. Go check it out, okay? But anyway, the key takeaway today is that the world is shifting. Global demand for dollars is weakening, and gold is being remonetized. These are absolutely titanic shifts in the global financial world order. In fact, gold was this year reclassified as a Basel III Tier 1 asset, meaning it can be counted at 100% of market value on bank balance sheets, and there's speculations that it might be designated as a high-quality liquid asset, which is all just, BS bankers speak, but it means that banks will be able to use gold as collateral for financing and for liquidity management. Or in short, this is gold as a fully liquid asset. Little nuances that have kept it from being an even more important asset in global trade than it has been. Now, that doesn't mean the dollar crashes tomorrow. Again, to be super clear, their stablecoin play in the USA is genius, and it probably is going to be a major checkmate play potentially to the Chinese yuan. But the game is far from finished. What we're seeing, though, is that there's a really more of a possibility of a world where the USA no longer has a monopoly on the global money system. China speeds towards gold. The US will bolster its own position through a digital pivot, pursuing strategies involving not just gold, but also Bitcoin and stable coins and open systems. In this scenario, with gold on one side, Bitcoin on the other, both assets can achieve much higher valuations. And yes, even with gold above $4,000 at the time I recorded this video, Bitcoin about $100,000, over the long term, with all the debt, all the money printing, all the bullshit going on, and the importance of these assets in the global world order, there is room for both of them to go much higher. Still, be warned though, we are in uncharted territory, and there'll be huge volatility along the way, as there always is. Thanks for watching.